By the end of this course, you will be able to describe what to consider in Step 1 in order to identify the contract, examine the facts and circumstances of a contract to identify the customer, and apply appropriate guidance to identify the contract term. The new standard establishes a single comprehensive framework for revenue recognition. The core principle is that a vendor should recognize revenue to depict the transfer of promised goods or services to customers in an amount that reflects the consideration to which the vendor expects to be entitled in exchange for those goods or services. Revenue will be recognized by a vendor when control over the goods or services is transferred to the customer. The application of the core principle is carried out in 5 steps, which are depicted on the screen here. Additional resources on the 5-step model are included in the Resources tab of this course. Now let's take a look at examples for Step 1, Identify the Contract. The first step in the revenue model is to identify the contract with the customer. While most people focus on the 5 criteria for existence of a contract, it is also crucial to clearly define the customer or customers in a contract, and also to identify the duration of the contract, which includes assessing whether a substantive termination penalty exists. Other important considerations include assessing contract modifications or situations in which multiple contracts need to be combined and treated as one in applying the 606 framework. When you start working through Step 1, Identify the Contract, it is important to define the customer. Let's work through some examples of defining the customer and some facts to consider. Click on each company to work through the examples. Review the facts about Biotech B to see what needs to be considered when identifying the customer. Answer the following question based on the facts that you just learned about Biotech B.
Does the federal government meet the definition of a customer for Biotech B? The answer is no, because the federal government does not receive any goods or services for the output of R&D work.
Review the facts about Red Company and how those facts are used to define the customer.
You can take a second to pause and read the full text here, but what's important to take away is that Red Company is a distributor of consumer electronics to the end customer, as well as a logistics company for the suppliers.
Now let's use the facts that we just learned about Red Company to answer a question regarding defining the customer.
The correct answer is C. Both the consumers they send the electronics to and the suppliers that they provide logistical and inventory service for are both customers.
In summary, why is it important to correctly identify the customer or customers in a contract? First, accounting for and presentation of consideration received from a counterparty may be different depending on whether that counterparty is a customer. For instance, it may be top-line revenue if they're a customer. It may be some other type of income. It may even be an offset to an expense account. Second, accounting for consideration payable to a counterparty may be different depending on whether that counterparty is a customer. And finally, correct identification of all customers in an arrangement may affect the analysis of whether the entity is acting as a principal or as an agent in the arrangement. One other aspect of the Step 1 analysis that is frequently overlooked is correctly identifying the duration of the contract. In other words, what is the enforceable contract term for purposes of revenue accounting? Making this determination can be critical to the analyses that will follow in Steps 2 through 5 of the framework. Let's take a look at examples of facts to consider when identifying the duration of the contract for revenue accounting. Review the facts about the logistics company contract to identify the term of the contract for revenue accounting. Answer the following question about the contract term based on the facts you just learned about logistics company.
The correct answer is B, a 5-year term contract. This is because of the substantial termination penalty, which makes it unlikely to be terminated after 2 years.
Review the facts about the Horizon Mobile Services contract to identify the term of the contract for revenue accounting.
The question is, how should Horizon Mobile Services identify the term of the contract for revenue accounting? Due to the lack of a penalty, this would be accounted for on a month-to-month basis, as the contract is not enforceable for the full 12 months.
In summary, why is it important to identify the contractual duration? If contractual term is less than stated term, the following may be affected. In contracts containing multiple performance obligations, allocation of the transaction price may be significantly affected for a contract with a specified term of, for instance, 2 years, that is determined to be of 1-year duration because of a termination clause, compared with the stated 2-year duration. Also, the termination penalty, if any, would be considered part of the transaction price. The termination penalty may be variable, in which case the guidance on variable consideration, including the constraint, would be applied. Finally, the periods covered by the termination provisions would be assessed in the same manner as renewal options. That is, we'd have to ask whether the renewal options provide the customer with a material right. Now that you have worked through some scenarios relating to Step 1, you should be able to describe what to consider in Step 1 in order to identify the contract, examine the facts and circumstances of a contract to identify the customer, and apply appropriate guidance to identify the contract term.
So let's wrap up there. Comment with any additional questions you may have, and we can expand and help. Please subscribe so you don't miss any new content. Hey, before we continue, let me quickly tell you about a collaboration we are doing with the TB4A Shopify account that can save you some money and help support the channel in the process. Are you an accountant with a sense of humor, but are having trouble expressing that in the 3rd meeting this week about account reconciliations? Maybe you're struggling to find that gift for your accountant friend or their new kid. Or maybe you're struggling to find some not-so-average office gifts. If so, check out TB4A's Shopify and get all the great business comedy gear. They're uploading new items each week. Use my code ACCOUNTINGACADEMY, all one word, for 10% off your purchase. Each sale will indirectly support this channel. Imagine bringing this fun cup to your next pointless meeting, so check out the link and see what you can find. Now back to the video. Alright folks, thanks so much for watching. Please like, share, comment, and subscribe. And if you can, donate at Patreon. Anything you can give helps to keep the lights on and ensures we can continue to create content. And of course, helps feed FIFO. If you want to contact us about anything you saw in this video, accounting advice, or ideas for future videos, contact us at patreon.com/accountingacademy.
This video is designed to be illustrative and does not represent an official position. We make no representations, warranties, or guarantees and assume no responsibility for the application of this material. Please seek advice from a competent professional if expert assistance is required.